The markets continue to fixate on Greece's debt woes, and the clock is ticking. Greece has a payment due to the International Monetary Fund in just 5 days. But how big of a threat is Greece to the markets? Let's bring in Mary Ann Bartels, the Chief Investment Officer of Portfolio Solutions at Merrill Lynch Wealth Management. And she joins me now on set. And Mary Ann, it's good to have you here. Welcome.
Thank you so much for having me.
And I want to get to Greece in a moment, but first let's talk about Obamacare. The Supreme Court just ruled in favor of those Obamacare subsidies, saying they don't violate the law. We're seeing a lot of the regional hospitals stocks up. The health insurance stocks are trading higher. What's your take on the ruling and what this means for stocks in that sector?
Well, obviously it's a positive, but we take a much longer macro point of view. And we talk about longevity in the baby boomers. And we have 10,000 baby boomers turning 65. Well, what are they going to need as they go into retirement? They're going to need health care. Healthcare is no longer a defensive sector. It's actually a growth sector. This is just another positive point for the healthcare sector.
All right, let's move on to Greece now. They have a payment due to the International Monetary Fund on June 30th. So either the default or a last-minute deal will be put into place. But at this point, does it really matter? I mean, investors are just tired of this saga that we've been seeing for some 5 years now.
I agree. We're kind of exhausted with Greece. Does it matter? Of course it matters. But we have been in the camp that we'll get a deal at the nth hour, and the date that everybody's going to be focused on is June 30th.
But in terms of Greece defaulting, could that spawn some short-term volatility in the markets? And if so, how bad would it be?
Absolutely. Could you, if something like that happened, yes, you would have some volatility. We would get the U.S. markets down, 5%, maybe 6%. But we would consider any type of sell-off within our equity markets as an opportunity to add to equity exposure. We don't think that you need to really sell going into this.
All right, let's switch gears and talk about the consumer. We had some pretty impressive consumer spending data out this morning. It was the largest increase in some 6 years. So are you bullish on the consumer discretionary sector, even though the Fed is about to exit the market?
Well, we've been bullish on the consumer. We've been looking for the consumer to spend, especially with oil prices dropping. And it's taken a long time. It wasn't until recently that we've actually seen the consumer actually pick up and spend. This data out this morning would hint that we'll still get the consumer to spend. As for the discretionary sector, it is an expensive sector, but there's pockets that we like media and autos. And again, with longevity, that's a $15 trillion economy with our baby boomers. We think that they're going to do a lot of travel and leisure. And a lot of the travel and leisure stocks wind up in the consumer discretionary sector.
All right, let's talk a little bit about your summer strategy. Tell us what you're telling clients and where do you see the opportunities throughout the markets?
We see the market sizzling more than they're going to be burnt. So we think that the opportunities that outside of healthcare is in technology. We are in the digital era. And so we have growth within the markets in terms of, internet. There's software, big data, cloud computing. So we think if you take a long-term view, a lot of the growth will come from that sector. One pocket we like particularly are semiconductors. And they're significantly off their 2000 high. And if you look at all the gadgets that we use, whether we're using phones, whether we're using iPads, whether we're using Fitbits, and now even our cars talk and beep to us, they all need semiconductor chips. Those are the brains.
And semiconductors tend to follow the trajectory of the economy.
They do. They're more cyclical in nature. So everything that we're seeing seems to be very bullish. What people also are not talking about are micro caps. Those are even smaller than small caps. Broke out record all-time high. Mid cap stocks broke out record all-time high. Not on the front page. And for me, that's very bullish.
All right, Mary Ann Bartels, thanks very much for coming in.
Thank you, Scott. Take care.
I'm Scott Gam, and you're watching The Street.